showtime.
Oh, it
Are we
is.
ready?
Yeah.
There's a little time.
Ready to go.
All right, it's all about eyelashes. I'm just going to give folks a moment to start populating into the session and see who we have coming our way. So I'll just give it a moment, let folks filter in. All right. All right, Stephen, am I good to go?
Yes, you are.
Awesome. Thank you. All right, let's get started. Hello, everybody. Welcome to Diversifying Your Deal Flow. I am really excited to get started today. We have an amazing panel. So the next 45 minutes, I expect are going to fly by, but we are going to do our best to get through all of our material. And then most importantly, give you the opportunity to ask some questions of our panelists. First off, my name is Andrew Zarro. I'm the Access to Capital Program Manager here at StartOut, and I'm your moderator for today's session. I'm truly honored to be here with such remarkable panelists to discuss this important and impactful work. The world is becoming a more diverse and inclusive place, and investors need to embrace this and build a diverse portfolio of startups. While there has been some progress in recent years, the reality is that many underrepresented entrepreneurs still face significant challenges when it comes to securing funding for their ventures and furthering their contributions to the economy and workforce. In this session, we will explore the importance of diversifying your deal flow to include underrepresented entrepreneurs. We will discuss the unique perspectives and experiences that these entrepreneurs bring to the table and how they can help investors identify new opportunities, unlock untapped markets, and create financial, social, and community wealth. We will also examine the barriers that underrepresented entrepreneurs face when seeking funding and how investors can help break down those barriers. So before we dive into our discussion, it is my true honor to introduce our esteemed panelists. So I will introduce each panelist one at a time and ask that they just share a little bit about themselves and introduce themselves to you all. And honestly, what brings you here today? So first, please join me in welcoming Lolita Taub. Lolita is a Latina GP at Ganas Ventures, investing in community-driven companies and changing the face of startup VC tech world. Welcome, Lolita. Please take a moment to introduce yourself to our community.
Yes, thank you so much, Andrew. Thanks to everyone who's here. I am so honored to be on a panel with Mariela and Sarah and excited to jump into the topic. So I've been in tech for over 15 years. I started in corporate, went into startups, and the last 7 years have been in VC. And so I'm really excited to be here to talk about the topic of making sure that we're backing underrepresented, underestimated founders, not just because it's a great thing to do as a human being to think that the whole world population has talent, but because we're also leaving money on the table and there's a great returns opportunity to look at the whole population.
Thank you. Next up is Sarah Millar. Sarah is the COO of Diversity VC. Diversity VC is working with entrepreneurs, investors, and universities in order to create an industry that is free from bias. Welcome, Sarah. Please take a moment to introduce yourself to our community.
Thank you, Andrew. As Lolita said, very happy to be here with the other esteemed panelists and to be working with StartOut on such an incredible and massive production. As Andrew said, I'm the COO of Diversity VC. We are a nonprofit organization. We work internationally. We work with VC funds, entrepreneurs, all with the lens around why increasing diversity, equity, and inclusion in the venture ecosystem, as Lolita said, leads to better returns. It also leads to better business overall, more responsible businesses. And I have been in and around technology also for about the last 15 years, was at a early stage venture fund for about 5.5 years, and now am director of operations at a startup as well. So have a bit of the perspective on both sides of the table.
Thank you, Sarah. Happy to have you here. And our last panelist is Mariela Salas of Latinx VC. Mariela is the executive director of Latinx VC, where she is unabashedly focused on growing and supporting the Latinx venture capital ecosystem. Welcome, Mariela. Please take a moment to introduce yourself to our community.
Thank you so much, Andrew, and thank StartOut for having me. Again, my name is Mariela Salas. I'm the Executive Director at Latinx VC, where we focus on increasing the representation of Latino investors in the ecosystem. We live in a world where Latinos in the U.S. represent about 20% of the U.S. population and only 2% of the investment ecosystem. So super excited to be doing that work. Very long career trajectory, but I'll stick to the basics. Outside of my work at Latinx VC, I'm also a doctoral candidate at Pepperdine University, where the focus of my research is at the intersection of venture capital, identity, and Latino studies. So very excited to be here.
We're excited to have you, Mariela. Thanks for being here. So we clearly have a diverse group of experts with extensive experience in venture capital, entrepreneurship, and community development. Honestly, thank you all so much for being here today. All right, now it's time to kick off our actual discussion. So let's begin with some general level setting and the data. The data is what brings us here today. So I'm just going to throw out some numbers before we start our questions. In the last 2 decades, only 0.5% of all the $2.1 trillion in funding raised startups went to LGBTQ plus founders. Overall, Black entrepreneurs typically receive less than 2% of all VC dollars each year, while companies led by Black women receive less than 1%. Latino startups, as Mariela said, received only 2% of US venture capital investment, a percentage that stayed nearly the same since 2017. And even worse, early stage funding, which is the most critical phase for startups, has stagnated almost completely. And women are massively underrepresented among both venture-backed entrepreneurs and VC investors, with companies founded solely by women receiving less than 3% of all venture capital investments, and women accounting for less than 15% of check writers. So that's why we're here today. Let's start with our first question. It's the obvious question. What does diversifying deal flow mean to you? And why is it essential for investors to actively seek out underrepresented entrepreneurs and also provide support once that check is written? Lolita, let's start with you.
Sure. Thanks, Andrew. Diversifying deal flow is a huge topic, right? And the whole reason we're in the business of venture capital is to diversify our investments. And when most of the capital is going to a small proportion of our population, we're not quite diversifying. And so for me, it's all about, hey, let's think about what we're here to do as venture capitalists, as investors. We're looking to diversify our investments to create returns. And what's the best way of doing that? Actually having a diversified portfolio. And how do we do that? There are different ways, right? First, you hire people that look like the people that you want to back. I think this is just a natural extension. At Ghana's Ventures, we invest in pre-seed and seed community-driven companies out of the US and Latin America. But we do not have a mandate for diversity, and yet 100% of our portfolio is BIPOC led and founded. We have LGBT representation. How does this happen? It is because of who is writing the check. So if you yourself are not in the underrepresented community, what you can do is hire people to go out and have this reach in the market and give you access to broader deal flow. You can also make sure, outside of just hiring them, to give them tech writing abilities. We're able to see different things that the rest of the population, the status quo Silicon Valley, will not see, because we're facing problems. We face problems that that others may just be like, is that really a problem? Just a brief short story. We had a startup that we backed at Backstage, that was at the beginning of my career, Capway, where the founder literally is talking about underserved community members on the banking spectrum. And she literally got laughed out and said, why would anybody be underbanked? And it was because of who she was talking to. What do you mean people don't all have access to credit cards? It's a different world. And so this is just like one aspect of it. So hire people, give them check writing abilities, get your access to these different communities, and just wait and see for the returns to come. I mean, Calendly is a great, if you're like, okay, Lolita, give me an example. Calendly is a great example of a Black founded company that became a unicorn. And at the beginning of their journey, nobody wanted to back Taub. And now look at this. Everyone's using Calendly and it's a great success.
Wow, I just learned something about that. I didn't know that about Calendly, and we all use it all the time. Thank you so much, Lolita. Absolutely true. I mean, that's walking the walk, right? Representation matters across the board. I'll look to you, Sarah or Mariela, if you want to contribute to that one.
Sure, I can. There's a pretty simplified explanation to this, which is diversification leads to better returns. We know that across the board in like the financial system writ large. It is the mantra, like you do not over allocate to one thing. And so why would you do any differently in a portfolio for VC? That is your fiduciary duty to your limited partners, who, by the way, are looking for GPs who have unique access to founders. And so they want to know that you are able to win deals, that you are able to convince the founders that you want to work with, that they should work with you because of what you're offering to them. And so by diversifying who you are going to, you're not only helping yourself in the returns that you're delivering, but you're also helping yourself in being able to go and pitch to LPs and say, well, look, I have access to this pool of capital that all of those other people are ignoring, and they're missing out, as Lolita said, on the returns that these founders and these companies are going to generate. And I can get in because I've put in the work and I've actually built relationships there that are lasting and trustworthy. So I think of it as like this is the job of a venture capitalist, is to be doing this work, and many do not do it well enough.
Yeah, for sure. And I would just add to that, I mean, there is empirical research already that states that there is this similarity attraction, right? So we are going to invest in people who we have similarities with. And similarly, just to your point, Lolita, we need to be hiring a more diverse workforce when it comes to our investment check writers, because the more that people, or specifically founders, see themselves in the people that are sitting across the table, they will be able, well, first of all, I guess research sort of states that they are able to negotiate and advocate better for themselves. So it's just super important and just really critical for us as we move forward to a more globalized and diverse world.
Thank you all. Yeah, I mean, one thing you just said that just made me remember this, it's in close-knit communities and oftentimes underrepresented communities, we get things done by who we know, because we're all in a similar boat together. So it's economies of intimacy. We're looking out for one another and helping, a rising tide lifts all ships. What happens when people don't have a boat? That's our job, to help that happen. Awesome. So now that we've established the importance of why we should diversify our deal flow, let's dive into the unique perspectives and the experience around how we do that. So my next question is, what are we solving for? How do you actively seek out and engage with entrepreneurs from underrepresented backgrounds? Mariela, I'll start with you.
Oof, I am not an investor, so I would actually like to pass that one off to either Sarah or Lolita.
Perfect. This is a safe space. Sarah, I'll look at you.
Sure. So we have a couple of ways at Diversity VC that we recommend that investors get involved and proactively look to diversify their deal flow, because especially for the majority of the current workforce in venture capital, like this is going to take effort on your part. These entrepreneurs are not necessarily going to just come to you. And so if you want to diversify your deal flow, you also have to walk the walk, as you said, Andrew. And so one avenue that is relatively straightforward is to go to those funds that are one stage earlier than you, that have an explicit DEI focus. Like that is, they have already filtered for you who falls into these categories, and companies that have already gotten some backing. And so for funds that are at, Series A, Series B, perhaps that's a pretty easy answer. But it's also like you have to create deep relationships. And so these are things that you have to put time into. It is not just going to be a purely, and anybody in VC knows, like there are relationships that you have that are like purely transactional, like give me a deal and I'll give you a deal. And then there are the people that you like, you want to talk about things with, and you actually want to like be their friend. And that's why you work on things together. And so finding those people in these communities who are, you know, going to bat for the underrepresented candidates or the underrepresented talent, like make those relationships a priority and put the time in. But there are so many different events that you can go to, funds that you can get in touch with, like mentorship that you can do. Like there's so many opportunities to do things to get your foot in the door. But then, and I think we'll talk about this a little later, like you have to actually write the check. And if you form a relationship with an entrepreneur from one of these underrepresented communities, and you know you're partnered with that person for 10 years, you'll have access to their network also. And so you have to actually like build trust with the community to get access to this. But one of the ways to do that is to just go out and find the people who are like swimming in the same lane as you and are willing to be a connection.
Yeah, I love everything that Sarah just said. Think about it, the multiplier effect, right? So if you figure out who you want to partner with, and you could just literally Google who is investing in underrepresented and underestimated founders, and you can see a list of accelerators, of VCs. I mean, I am one. I'm always happy to make friends with allies. Definitely don't like transactional. I have seen that where it's like, hey, I want to invest in, you know, checkbox women, you know, people of color, LGBTQ. I don't tend to want to build relationships. I guess I should say I don't tend to. I just don't build relationships like that because we really need to take care of our community. We need to build relationships. This is the long haul, right? So when you're thinking about it and you're an investor, whether you're an angel or a VC, maybe you're also an LP. So one way of, and I've seen this as we've been fundraising and deploying at Ghana's, some of our LPs want to be an LP in Ghana so that they can get access to our diversified deal flow. And I am filtering, right? So I have a large following of over 81,000 founders, funders, and friends in the ecosystem, have been investing in it for 7 years. I'm not the only one, right? There's a handful of folks that are doing the good work. Sarah knows people, Mariela knows people. Just getting to know who are the people who are actually putting in the work, who have that trust established with the ecosystem, who has that deal flow, quality deal flow too, because just meeting people isn't enough. And it's not enough to just take meetings with underrepresented founders. I will say I launched a tool called the Startup Investor Matching Tool. Some of you may know of it. If not, you can Google it. It's a free platform to connect underrepresented founders with investors. And unfortunately, some of the feedback that I've gotten from founders is they just kind of wanted to put me in their pipeline for, you know, checkbox criteria to be able to say we're talking to. On the bright side, in the last couple of years, we've seen over 60 companies get backed that are founded by underrepresented founders that have gotten back through the Startup Investor Matching Tool. So this is another way of getting diversified deal flow. I share mine because I don't have all the money in the world to back all the best founders. So happy to be a resource there. And it's, like I said, a free platform. And really the goal there is to go against that whole concept of there's a pipeline problem. There is not. They are here. We are here. All you need to do is put a little bit of effort to connect with us. So there's a Startup Investor Matching Tool, making connections, meeting Mariela, meeting Sarah, saying who should I connect with, starting those relationships. So being really authentic about it, because founders, investors, we all get it. Like if it's BS, we do have a BS meter and we don't want to work with those people, right? And that's why we have this diversified access to deal flow. That's not something that everyone, especially in the status quo world of Silicon Valley, will have access to. One other reason to want to build relationships with us and to partner with us And we're not all going to be each other's cup of tea, so that's okay. But find people who are, and then just work with us, and let's do this together. Find those diamonds in the rough, and back the best founders and make some great returns.
Well, thank you so much. I'm just fervently taking notes over here. So just a couple of items that I want to name. So this is for the long haul, I heard. This is about relationship building that is rooted in authenticity. I love the BS meter in there. It's not just transactional. It's not just checking a box and saying that you have this, this matrix that you need to fill. Lolita, love the shout out for the startup investor matching tool. I'll just reiterate that here for anyone who's watching live, anyone who's watching this recording. It's an amazing resource. Check it out and feel free to give a plug for it again at the end, Lolita. And then what you just said, there is not a pipeline problem. And that is so fundamentally true. There are so many great founders doing really amazing work. They just can't get in the room for the meeting. So that's, you're breaking that down. They are here. We are here. Checking the time. Okay, so as we continue to navigate the entrepreneurial landscape, it is crucial to acknowledge the challenges that are faced by underrepresented entrepreneurs when they're seeking funding. We just talked a little bit about that, and both Sarah and Lolita just started to hint at my next question. So let's go right for it. If we start to pull at that thread of where capital is originating from, it goes deeper and deeper. So let's explore that. Let's talk about the accountability cycle. How can we keep LPs accountable to invest in the GPs who invest in diverse and underrepresented communities? Sarah, I'll go to you for that one.
Yeah, we think about this a lot. And I'll preface this with, I think even 10 years ago, even more recently than 10 years ago, VCs were very not transparent. And so it was with the genesis of a lot of these data reports that a lot of organizations have done that kind of unveiled, and not that it was ever a mystery, like people knew what was going on. You can go to a lot of VCs websites, they have their pictures up there and you can just do a quick little analysis and there's a problem. But the data reports were really helpful in kind of forcing a lot of funds to come to a reckoning with that and to understand, okay, we are part of the problem. And I think that we're at the beginning of that same journey with some of the LPs that participate in the VC ecosystem. You see only a handful of them really need to be public about who they're investing in. When you get to foundations, endowments, family offices, there's no requirement that anybody be public about what they're investing in or even their goals around diversity. There's far fewer pledges or commitments at the LP level than there are at the VC level for investing in more diverse managers. And so the way that Diversity VC has approached this is we first have to understand what the landscape looks like. And we know if we go one level up from what the founders look like, it's pretty evenly matched at the investor level who actually has decision-making power at a lot of these VCs, whether it's a GP, a principal, somebody who has check writing ability. And so we tie the thread between we're not seeing the founders getting funded because we're not seeing the investors getting funded. So then who are the investors and the investors? And not saying that we are going to suddenly start, trying to do training or development for like people to become LPs, although I think that there's a lot of room for that, but rather going to LPs and giving them a playbook for this is what the industry looks like. This is what we think good, better, best looks like in terms of not just who is represented at those funds, but also what practices and policies do they have in place that are fomenting a good environment for somebody from an underrepresented background to want to come work at? Are they promoting people from junior positions? Are they giving economics? And that actually is one of probably the stickier points is you can give the title, a position to anybody. Are you actually giving them the economics and the upside in a fund that they deserve? And that's so we're working on what are these different indicators for LPs to be aware of as they're looking at different funds to say, this is good practice, but it would be, here's a couple of other funds that are doing this much better. And here's how you should be, like a rubric to evaluate different VCs against.
Yeah, and just to piggyback on what Sarah just said, I think just to be very clear, I think a lot of commitments didn't come until after the murder of George Floyd. And since then, we've seen, while there has been a lot of public commitment, there has not been very much action. So it's really difficult for us to really because their data is not public. It's really difficult for us to sort of gauge and keep folks accountable from a reporting perspective. And then I think the other thing that we really need to think about when we think about and making LP investments into more diverse GP, a lot of our emerging managers and emerging funds are quite small, and they're really not able to meet the check writing limits or minimums of some of these larger organizations. So it's this cycle where, because our funds are a little bit smaller, and at least in the Latino community, our average fund size is about $25 million, between 25 and 50, and then we have some micro funds. And so when these larger institutional LPs are saying we really want to make more commitments into more diverse GPs, well, they really can't, because of the limitations that they have when they're making those investments into the GPs. So for example, if we say there's an institutional firm that came to us and said, well, we really want to make more, investments into Latino VCs, but, our minimum check size is 10 million and we can't be more than 10%. Okay, well, that leaves us with about 3 funds in the GP in our GP world. So I think that there's just a lot of learning that needs to happen on the LP side before we can really get to the root of having those funds flow down to more diverse GPs and then more diverse founders as well.
Thank you, Sarah and Mariela, for summarizing my existence and experience as a micro fund GP. It's so true. So here's the real truth about it. The big foundations, Mariela is just calling it out, and big LPs, they don't have the requirements that parallel with what we're building. I have an aim for a $10 million fund. If these foundations are writing minimum check size 10 million, even if they liked me, they're not going to be able to invest. And so I think these big institutional LPs that really need to think about creating these different vehicles to be able to invest in smaller funds, because that is truly where we're going to start. And why, Lolita? Why do we start with smaller funds? Well, think about if we have to put our 1% commitment in our fund, who has that kind of money? Not most of the underrepresented GPs that are building funds. I certainly don't, and that's certainly part of the reason why the 10 million. But it's also the limit in how many LPs we can bring in. We purposely also created a target of 10 so that we can honor the SEC cap of having more than your 99 LPs. So that we can bring more people in, because we are smaller, because we are community driven, smaller checks, because we want to have the community involved, because we want to win together and create generational wealth together. And so if you think about that, like where we're coming from, and you have these institutions that are like, well, we only write $10 million checks, it doesn't fit. And it's not because we're not ambitious. It's not because of any other reason that we are where we are and we need to start where we are. That doesn't mean that there aren't these larger funds, Ulu Ventures, Chingona Ventures. Like we have these Latina and underrepresented fund managers that have these broader funds, but they had to start somewhere. And we all have to start somewhere if we really want to open up that aperture of opportunity to build funds that are firms, multi-decade firms. We need to meet us where we are. And then the other thing is this, that unfortunately with George Floyd, I love that you called that out, Mariela, there was this whole rush of like, here's some capital. A lot of corporations were creating these programs, but they were discretionary funds. They were thought of as like philanthropy. I have had LP conversations where they're like, I'm sorry, Lolita, we're not investing in underestimated diverse GPs right now, fund managers. And I'm like, but don't look at me that way. Look at me as just a GP who's here to make you money. And so there's two things. One is, are we trending out of what was trending because of George Floyd? Is that the right reason not to invest in people that are not white cisgendered males who come from a Ivy League background? Or what do we really want to do when we think about there's money to be made when we invest in a diversified portfolio led by diverse founders? So big questions to answer, and putting our money where our mouth is.
I want to add one more thing to that, or maybe two more things to that. So Diversity VC did a research report last year around the how much funding or how much AUM in the US was allocated to underrepresented founders, and it was less than 2%. My bet would be that the same is true at the LP level. But we shied away from saying this is the strategy that you should adopt because of exactly what Lolita just said. If you set aside capital for making these investments, you are identifying that as this is a separate strategy. And so to have different metrics, to have a different rubric for how you are evaluating companies or funds that fit into your diversity or impact initiative, and having worked at an impact fund, like we were grouped in with the diversity funds, and I was like, well, we do completely different things. Like, how are you evaluating us on the same scorecard? But the other thing I'll say is LPs break their rules all the time. So do VCs. Like, you are always going to find that opportunity that you think is great, and you're going to bend the rules a little bit for it. And so taking another look at those rules and saying, to Lolita and Mariela's point of like, we only invest $10 million. Well, what's the rationale behind that? Is there flexibility to that? If somebody checks 9 out of 10 boxes, but that's the one that you're worried about, like, is that really, like, how much weight do you assign to that? It's kind of just an easy way to say no. So be a bit more introspective and look more at, what am I trying to achieve with this capital? Is it returns? Is it, saying that I'm in the name brand funds? And just be honest about what that goal is, because then I think they'll find that there are some things that can be a bit more flexible.
Wow, this is all amazing. Thank you so much. I'm seeing a lot of trends here. We are where we are, and we have to start somewhere, but funds need to meet us where we're at. Sarah, what you just said about VCs and LPs, they break the rules all the time, and it's the easy way to say no. And how many times have we encountered folks who are, that's it, that's the reason, there's no further conversation. And I think that does stem back to the authenticity part of it. And I do want to just take a moment to thank you for naming and having the conversation around the influx of the discretionary funds that came after the murder of George Floyd. And so many, it was a point where so many of us thought, okay, the needle is moving. And to hear you so honestly, Lolita, speak just now about how that funding is dried up, or it's redirected for a different reason. I mean, it's important to name that. I'm really grateful that we're having that conversation right now. Okay, so I want to be mindful of the time. We just dove into the barriers on both ends, both for entrepreneurs, VCs, investors, LPs, GPs. So Lolita started to name it. And now that we've discussed the challenges, I think it's really important for us to shift and focus on solutions, but also the successes. I think those wins are just as important. And you're doing it right now in lifetime. So let's explore a little bit from your experience, how investors can actively contribute to creating this inclusive ecosystem. So I'll offer this to all of you. Can you share examples in your experience, or those that you know, of successful investments made for underrepresented founders, and maybe identify some of those steps that where you were able to support those founders?
I guess that one's for me. I have invested now in 100 companies in my VC career. And so there's a lot of learned lessons, a lot of really great founders that act in my history that have now also become like VCs. So that because we are talking about diversifying deal flow and just in general, it's not just about the founders, but the GPs and the LPs. And one thing that's really cool before I talk about some of my portfolio companies is seeing the evolution, right? There's so many of us that get what's happening, that get the opportunity, and we're saying, okay, well, we're not going to wait for this table to be for us to get invited to the table. We're going to go create one. We're going to go pull up a chair. We're going to go and do what we can. And some of these founders have gotten, like in the 7 years that I've been in VC, some of these underrepresented founders have just been like, I'm fed up with this. I'm going to do something about it. I'm going to build a fund. I'm going to build a fund of funds. VC Include is one of these programs, right? Where it's literally like, hey, let's get capital in the hands of VC fund managers that are going to invest in our communities because there's so much opportunity. And so one thing that I would just say is really beautiful to see is that at the same time, it's frustrating because we are getting, little drops of water, if you will, drops in the bucket of capital to be able to shift an entire environment. And so we find our community, like Mariela, Sarah, I know we're people, like we're each other's people, right? And we see and we look at how consistent are folks being on their message, on their actions, and so on and so forth. And on that note, like maybe you're not focused completely on investing in underrepresented founders, or GPs, or becoming an LP, but definitely consider it, right? If you're no matter what your title is, you can be you can start your own fund if you want to. Not going to say it's easy. Definitely do your homework. And if you want to be an LP, it's very similar to being an angel to a founder. You can invest in funds. And there are those of us, especially in this community, who want to bring in the diversity into our cap tables from an LP perspective. That's certainly the case for us. We're really proud of our diverse LP family. On the side of helping founders, there's things as simple as newsletters. I literally yesterday got on a call with a founder that we're going to move into due diligence with. And he's like, Lolita, like, we are oversubscribed, but I want you to be in this round because literally you didn't even know you were helping me. But those newsletters that you have for underrepresented founders with the resources and all these capital opportunities and all of the different connections we can make and the startup investor matching tool, it's helped us get to where we are. So think about what you're doing. Maybe it's just LinkedIn messages, posts that you are putting together, or Twitter, wherever it is that you live, TikTok even. But if you're able to provide valuable content that doesn't take you very long, that's one way of supporting this ecosystem. Communicating that you want to be supportive of this ecosystem, of our founders, of us as GPs. And it's okay. Maybe you won't get it right all the time. And it's hard to be an ally. I get it. I also get slack from it, like sometimes. But we do our best, and that's what we can do. But messaging, resources, it doesn't hurt anyone. It doesn't take anything away from anyone when you're just like, look, I have this resource. Let's have everybody know about it. That's definitely one way I've helped companies, and actually what's led to some deal flow for sure. In terms of who are we backing? Recently, we invested in a company called Latitude. Latitude is this company out of Latin America that's really uniting the startup ecosystem across the entire region, bringing financial tools for companies to incorporate, to manage their companies. And it's been wonderful to see. I mean, we co-invested with A16Z and NFX, and it's been wonderful to watch them grow. And this is woman co-founded company, and I'm super excited to see them grow. Other ways that we've been helping, again, connections are kind of the biggest thing. And also talking about strategy. We personally focus on community-driven companies. So that's a lot of what we do when we're helping our founders. What does it mean to be community-driven? How do you leverage your customer set and your community around your company to be able to build your product, to sell it, and to scale it? And so those are some of the ways that we help at Gonus.
Yeah, and just to sort of take that to the next level, at Latinx VC, we just hosted our first pre-partner level VC summit for Latino VCs who are currently working in venture. It's the first time it's ever been done, but really it was about helping VCs with career development and really honing in on some of the skills that it takes to work with founders. And we had a really interesting panel that was of three founders who had very competitive rounds, and they just got so much insight from that. And so really just leaning into ensuring that the few Latinos that we do have in the ecosystem really stay in the ecosystem and are able to make investments into more diverse founders.
I'm going to different part of the question on kind of stories of success and talk about. I mean, we could definitely name names. There's a bunch of founders that I've backed that I think are incredibly successful, and I also want to be keen to define success as I see it, because I think when we are talking about success in venture, it is very frequently like you are only successful if you have delivered this billion-dollar creation of value for your investors. And that is absolutely true. We have to give money back to our LPs. Having a billion-dollar company in the portfolio is fabulous. But I would also look at, especially for underrepresented founders, like it is a success to raise money because this deck is stacked against you. And so raising money, continuing to raise money, that's a success. Continuing to build your business in the face of a lot of adversity, that is a success. Even a failing business is a success, because one thing I'm very cautious of is if we continue to look at underrepresented talent as like the only way for them to succeed is for them to succeed at this really, really great or setting the bar super, super high, then we're not making things equitable for them, because we all know of the large number of the majority founders who have failed at multiple businesses. They still go out and raise money and they get multiple shots on goal. And so I also think that we should define success as like sticking with it, knowing that you have something of value to bring to the ecosystem and continuing to deliver that over time. And not just thinking, aim for that really high bar, but recognize that just if you don't make it there, that's where 99% of people end up. And so it's okay to be in that camp. And it is a success if you are delivering value to your customers, to your investors, to your LPs. So.
Wow. You're all giving me chills right now. I just typed a bunch of quotes of what you just said. I mean, how are we defining success? Wow. Okay. So I want to be mindful of any questions. If anyone from the audience has any questions, we only have a couple minutes left. So feel free to share them in the chat if you'd like. I'll keep an eye out for it. But this has just been such a wonderful conversation. I feel like we're just so lucky to have you to share your insights with us, so that we can see from your lens and your perspective, what this massive undertaking is and how you're addressing it every single day through your work. And it's truly an honor to be able to talk to you about it. I'm not sure if we have any questions from the general audience right now. It's okay. But I think maybe the last thing I'll say, and maybe we can do it in 2 minutes, is how I guess giving you closing comments. If each of you want to take a moment, because I don't want to set you up for a very quick question. What are your closing comments on this as we're telling folks to leave this session? What's their next step?
Wire and hire. I mean, like, those are the two things, right? I think we used it a few years back, but it's true. Hire and just write the check. I think Sarah mentioned that first during this session. We have to write the check. Mentoring is one thing, writing the check is another. So put your money where your mouth is.
I think for people who are just getting started, creating a plan of action and like actually writing it down and setting goals is a good way to, in the same way that you would do for a diet, for an exercise regime, like this is going to take effort and time. So make it a plan.
I don't have anything substantial to add. I think Sarah and Lolita really hit it on the nail. So I'm good.
Thank you all so much, truly. Panelists, I look forward to being able to work with you again. Thank you for sharing these valuable insights and perspectives with us. We've clearly covered a broad range of topics related to diversifying your deal flow, supporting underrepresented entrepreneurs, celebrating the wins and the successes while acknowledging there's a lot of work in front of us. So this does conclude our panel on diversifying your deal flow. Again, I just want to extend my sincere gratitude to the three of you. I remember telling you when we met to prepare for this meeting, I'm a huge fan of all of you. And so this has just been so cool for me personally to be able to talk to you all about this because you're doing amazing work. But let's continue the conversation, everybody. Let's keep working together towards a more inclusive and prosperous future. And a couple of shout outs. If you are an investor looking to diversify your deal flow, please go to startout.org/investors, or you can email programs@startout.org to sign up for the portal. Please reach out to Mariela, reach out to Lolita, reach out to Sarah. If you have any questions or thoughts, we'll be sure to get their contact information out there for you. And truly, thank you for everything, everyone. Happy Pride, and remember to take care of each other. Thanks, everyone.
Thank you.
Thank you.